Hi, I'm Jamie from Tableside Creatives.
Hi, I'm Lan Nguyen, founder of Success Accounting Group, and we're here to talk about year-end and tax planning for our business owners.
With the end of the financial year coming up so quickly, what would be some, key priorities that you believe people should be focusing on right now?
I think we've only less than 90 days to go, Jamie. The best thing is to get your books in order and book an appointment with your accountant. They are the best people to look at your tax and your 9 months of data. And the idea is to forecast what tax you will be paying. Now, once you know that figure, you'll be able to work with them and implement the strategies that they suggest to reduce your taxes.
Okay, what are some of the strategies that you usually see from most businesses?
The easiest way is to defer income. Defer income means instead of invoicing before 30 June, you can bring it forward to 1 July. That way, it will defer that assessable income to the next financial year. Given that we have the tax cuts in 1 July 24, as announced by the government and approved, I suggest that it would be the first tax strategy that every business owner can apply themselves. The next one could be bring forward expenses. As I mentioned, if you're deferring income, the flip side will be bringing forward deductible expenses for your business that you can invest right now. Because if you're going to pay for them in July, August and September anyway, why don't you pay them now? And that would make your suppliers extremely happy as well.
Yes, of course. So Lan, can you give me some examples of what would be some of those expenses that you could bring forward into the new year?
Oh, thank you for that question. Things that you would naturally will pay in July and August, September could be your staff super. So if you pay super before 30 June, normally we suggest 21 June so that it clears the super fund, then it can be deductible. So you realize that you'd be paying staff weekly or fortnightly or monthly, so you'd want to make sure that that is cleared for your payroll. The other things that you can bring forward is rent. I mean, monthly rent has to be paid. And if you pay July, August, and if you have the cash flow, why don't you pay it in June? So you get an upfront deduction. Other things that if you have a business loan and you have to pay monthly business interest, again, bring that forward. So you can, that one you have to check with your bank if that facility is allowed. There's so many more strategies that I can share and we could be here for a long time, but there is a gift that we offer at the end if you listen through the whole video.
That all sounds great. So I guess those are things that you're currently paying for. Is there, other things that you could invest in? I know people tend to spend their money on, tangible items when it comes to tax planning and coming to the end of the financial year, but is there other items that you could invest in, like maybe services or something that could help?
I agree with you that we see, or a lot of our clients see tax planning as a approval to go shopping. Because really, if you need a laptop, if you need a car before 30 June, they're the good times to invest in those tangible assets. And funny enough, when you ask about tangible assets, there is still the instant immediate write-off up to $20,000. If you purchase something for your business, you can immediately offset that against your income. So that is a wonderful way to reduce your tax as well as invest in your business as well before 30 June.
Yeah, so that's good to hear that it's all about, tangible assets that you can buy for the business. But is there professional services and things that you could pay for to also help reduce the amount of tax you're going to pay?
Yes, so the same rule applies for professional services as well. So as long as that expense is necessarily incurred to generate income, for example, your marketing expense, your accounting fees, legal fees, but generally a funny thing is a lot of our clients come and want to pay for the 12 months fees for accounting or marketing only because that allows them security and gives them an upfront discount of 25%, because if you're in a company, you get a deduction upfront. So they see that that is a benefit for them in work cash flow, a saving. And for us, we know that they're committed for us for 12 months, so we look after them extremely well. And that is a win-win for both.
Yeah, I can see that. So over the past few years, how much would you say that you've saved people in tax planning?
That's a very good question. In fact, we did a campaign to record all the tax dollars that we saved for our clients in the last 12 months in FY23. And we were over $2 million. And it was including ATO tax debt, but also strategies that client was able to implement before 30 June. So had they not seen us for tax planning, they would have had to pay the tax now. the ability to defer tax or be in control of your cash flow is a great sense of freedom and a wonderful feeling for our business owners.
Okay, so that all sounds great. So could you give me a specific case of how tax planning has helped someone benefit from it?
I did one recently with actually a restaurateur, and he has a single Italian restaurant. I won't say the name, but in Melbourne, blue chip suburb in southeastern. And he's worked with me a couple of years doing tax planning, but also business coaching. And he's actually flagged the idea that he wants to open, and he's ready to open a second branch also in, closer to the city. And in order to do that, obviously, we helped him with building his net profit and current business in a way that's very profitable. But when it's profitable, then he has another good problem to have, which is the tax that he's going to pay. So with the tax planning, we were able to direct the money so that it legally saves him tax, and then he can reinvest that lump sum into the new business. I'm glad to say that he's opening his second branch now, and I'm looking forward to having a coffee with him at the second branch.
So that's an amazing outcome. So anyone else that would be looking to pursue that dream and open up a second business, what would be the next steps?
I think that the next step would be to come and book your tax planning with your accountant. If you don't have an accountant that is proactive and believe that tax planning is important and significant, come and see me and book a time to catch up with our team. We will certainly help you and review your current business, and potentially there is a way to open your next business or achieve your dream of any of the other things that you desire to achieve.
You heard it here first. We've got less than 90 days. Lan and her team are a super proactive accounting firm, and if you're looking to chase your dreams this year and pay less in tax, then comment below and we'll send you through a short tax planning guide to achieve this year.